Welcome back, YouTube. So in today's video, we're going to do an update on the triple bottom that we were talking about in the last video as far as for whether or not it's formed. And as you can tell by the title and by the chart here, we did get the rejection just as we did the previous two times. So we have in fact formed a triple bottom. And we have the green candle here, which is technically standard for what happens after you A, get your rejection off of a main support line, and B, on a triple bottom, typically that includes a bullish movement to the upside. So we're going to talk about what's next and take a look here at the shorts as well. Before I get into that, also don't forget that this video is brought to you by Moomoo. Check out the link in my description section. If you do stocks, options, things like that, want market updates, you can get and you can also get up to 15 free stocks, and you can get all those updates through Moomoo with the link in the description section. So with that being said, let's take a look here at the chart. So as we've been charting, even before when we were charting our previous lines here back in like August and getting our rejections and stuff, this was the go-to. This was the bottom. This is like the first entry into what we call a full-on like reversal here, us getting into like the lower parts of our trend cycle. And after the announcement of Elon purchasing Twitter, we have not broken back into that. Come down, but we've always gotten rejections off of it. So this has been really a great support line. This is like where, like I said last video, this is like where we stand with the price action. And I know we have things going on with the markets in Japan, and there's blood everywhere in the markets. Everything's crashing, but we have to kind of look at that as far as targets of entries and not targets of like despair or when people. I know obviously it depends on how you're playing the coin, but when people get upset about the price action of an asset going down, they're like, "Oh my God, it's going down. It should be going up," and stuff like that. People who are like traders, swing traders, and stuff like that, they're excited. So when you see things like this forming, and that's really why I come on here and try and give you guys this information, because when you see things like this forming, they're going to be the ones buying right here. They're going to say, "Oh my God, this is a terrific entry." Last time we were here, we went up around like 20%. The time before last when we were here, we went up around 20% before we got a rejection. After that, we went up around 40%, and then we got a rejection. So I'm buying right here when we get close. And typically, these are going to be the people that are taking profit between 20 and 40% because, obviously they're not long term, but they're just here to kind of like scalp the coin. So you have to kind of account for that to say, okay, well, in the next cycle, where we most likely to get our rejections from? Is it going to be somewhere between like around like 9 cent or the upper end of 11? And it could be anywhere in between there because technically, yeah, we're still in this gap up territory here. So we're establishing where our support resistance is going to be. It would be great if we were able to come up and break somewhere in between here, the 7, the 9 and 11 mark, and just come down and establish this is our new support, because we had a few tries, and if we repeat our trend last time, we will go up to around 10 cent, the high 10 range, between high 10 and low 11 range. We've had this consolidation, we've had 3 attempts to break back above it, and we've got rejected each of those times. But we've also had 3 attempts to break below 7 cent, and we've gotten the bounce 3 times. So we're somewhere in here when it comes down to price action between swing traders, people who are long in the coin, who obviously are saying this is a great buy. They're going to buy at around the 7 cent mark, and they're also going to either take profits or the volume gets low at around the 11 cent mark. So this is ultimately going to be the range going forward. Outside, if you look at like the macros, you'll say that is it likely that we can get a further breakdown? And it will take something really big for us to get a further breakdown, like if because we're not getting another Fed meeting until February, so that macro is out. Shorts, if we get some low volume here over the holidays or something like that, shorts could obviously come in and take advantage of that and try and push us down. But ultimately, this is where there's a reason I called this triple bottom the other day. This is where we the price volume typically picks up at anything at this range. So this is a great entry for traders and people who are long. So it will take something really big for us to break down below that. But if we were, I'm going to give you guys the FUD and the Hopium. So the FUD would be If we got a breakdown between here and we fill the last gap down, we'd go like high sixes and then we get a bounce. But typically it's very volatile and we're either all red or all green in this area here. So it was obviously all green. We had this explosion up from 6 cents when Elon purchased Twitter. And before that, we'll see it was either all green or it's all red. So it's very decisive if we get a breakdown from here. But typically, because we have that long-term catalyst in there, and I know that there's some fear going on around like Twitter and Elon and stuff like that, but it'll take something really big, in my opinion, on like the FUD side to get it to break down to around the 6 cent level. On the positive note, like I said earlier, we're going to be looking at something between like around the 9 cent and the 11 cent on this bounce back up. So we're going to have to see if shorts come in, because they may come in to try and stomp this out at around like the 8.4 range, or maybe if we're lucky, this will be great, a great place to, even if we build up an additional support here and went sideways. But based off of history, we're very decisive with one direction or the other once we get a bounce off of this support line. So don't be surprised if you see shorts pick up at around like the 8.4 range. But ultimately, as far as for testing to support or volume wise to get a new high, we're looking at somewhere between the like low 9s to like the low 11 mark. Now let's take a look here at shorts just to kind of see what's going on with them. Yeah, shorts are through the roof. Through the freaking roof. Oh my God. Yeah, so 18.70% today. They are climbing. So yeah, this is what I meant by it will take something big, and they're trying to take advantage of the, let's go back here and take a look at the volume real quick just to be sure. But yeah, they are trying to get this thing down. Oh, there we go. So yeah, low volume here. So this is what happens when we have low volume. So you can take a look here at the volume down here, and they're trying to take advantage of that. And they see, okay, this low volume, they're close to that support line. Let's get it to break. So you see those giant green candles. They're going to try and get this down to break below, because they know that if they can get it to break here, it should theoretically drop another penny. So this is going to be very, very interesting over the course of the next few weeks. But I'd say over the next 48 hours, we'll have a decisive trajectory as far as like on the next leg up, or if they're going to get it to break down. But just kind of take that into consideration to know what's going on here. It's not necessarily always retail that's selling or buying and stuff like that. When you see a combination of news and hopium and stuff like that, yes, retailers can come in, traders can come in, and that will be normal to price movement because they want to make a profit. But when you get close to the support levels and the areas where it's very decisive on the momentum or the trend, and we have low volume, don't forget to check shorts, because typically they're watching these charts the same way we are, and they're going to try and take advantage of certain levels to get the coin to break down, because they're saying, okay, if we can get it to break below this point, then we should be able to get another gap down here to get it back down to around 6 cents. We can kind of take our profit. But let's take a look at the effort that they're taking to make this happen. We have low volume here. We're still putting up a green candle because of the low volume, but look at the candles. Look at the amount of shorts. We're up 20% on the day for shorts, 18.70% on the day. Look at the effort that this is every day. They're stacking it on, and they're trying to get this down. So when you see these breakdowns, this has been happening since, what is this? Really since the 16th, but the 17th was right here. The 18th was this candle. The 19th was this candle, and this is today. So every day they're layering it on in the shorts. So when you see these breakdowns and you say, oh my God, those just decline. No, there's low volume right now, and shorts are layering it on every day. So tomorrow could be another green day. Will they go up another 10%, 20%? This is their effort to get it down. Every time there's low volume or there's uncertainty right now, like right now there's uncertainty in the economy, there's uncertainty around Elon and Twitter. So there's low volume right now. People are waiting, and they take advantage of this. So just kind of keep that in mind before you start making judgments and stuff based off of the price. That it's not necessarily retail that's doing this. They're going to have to close these positions out in the short process, but ultimately their goal is to make a profit and ultimately influence you guys, so that if the community is selling and stuff like that, you're basically helping them make a profit, because that's how they make money, when they make a bet that it's going to drop in price. And if they can cause some fear, some FUD in there to get people to kind of sell and help them push it down, hey, we just made their job a lot easier. So keep that in mind with price action and stuff like that. But ultimately, yes, we got the bounce. We did form our triple bottom. So just as we were talking about, if you haven't seen the video, go back and check it out. It's my last full length video, and you'll see the projections and stuff that I gave and where I said we would get a bounce at, and it literally just worked out perfectly. So hope you found value in this video. That's my Dogecoin update. Check out my other videos, subscribe to the channel, share it with a friend, like it, and I will see you in the next one.